Good evening, everybody. Michael Silva here. Welcome to the Stock Market Brief Show. We're going to be going over quite a bit today, including the S&P 500, small caps, the IWM. We're going to go over the Qs. We're going to go over weekly expected moves. I'll touch in on crypto or Bitcoin. We're going to get into some commodities and just a lot of stuff that's been going on in the overall markets, news-related, all that, and more on today's Stock Market Brief Show where we navigate the financial markets. If you take a look at the pinned comment section or in the description, you'll have a link to the swing trading community. It's only $9 a month, or you can save by paying annually, and you get access to all of these benefits there. We also have a link to Interactive Brokers. I'd highly recommend checking them out. They're a great platform, but not only that, they also have a lot of free resources if you want courses on various ways of trading. They have great blog articles, and they have webinars there too as well. We're going to go ahead and start right into it today. So the S&P 500, right? If you're not trading intraday and you didn't watch the price action, you'd look at this and be like, it finished unchanged for the day. But there was quite a bit of action underneath the surface. Energy was the sector that got hit the most, and we'll pull up a crude oil chart here in a short notice to really show you what's been going on there. NVIDIA flew higher, right? We had a new closing high NVIDIA up almost 5%, gapping from the lows over here. And you can see that we closed at, I think it was 1150 there on, I think some basic news on the going into the open, obviously causing that gap up. We had Roaring Kitty out posting a Uno reverse card, which led GME to absolutely skyrocket going into the open. And now there's talk about E-Trade considering kicking him off the platform, which would just be a bad look. I saw something that there was concerns about possible manipulation, but if they're going to kick him off without any proof, that's kind of just a very bad look. He did post his, his trades here, and it's just a monster position. So holy cow. We had some news around Atlanta Fed GDP. The Q2 growth estimate is 1.8%, which is down from 2.7. It's down even more from the prior couple of weeks prior to that. So you could see the nowcast for GDP has been declining. We had a weird glitch in the New York Stock Exchange today, causing some interesting price action, which obviously the stocks weren't open. All right, but it showed Berkshire Hathaway, the A stock, right, down 99%. Massive red candle. Everyone was up in arms wondering what was going on. But don't worry, Warren Buffett told us to hodl. I'm just kidding there. But if you were able to buy the dip like I was, you made a massive profit of $188 million. Congratulations if you did so. I'm just kidding about this, and I'm just kidding about that. Those are Photoshop that I found out on Twitter. We had the manufacturing side of the economy information come out, ISM manufacturing PMI, and that came in softer than expected. You have the data over here if you'd like to look through that. But we'll just go more mainly over the price action. But that does obviously bring in some volatility. And come on Friday, we have jobs numbers, and we have some macro jobs throughout the week too as well. This is an interesting chart from B of A, their sell side indicator. And it was really just reading a neutral reading. It's off the lows where it could get quite bullish. But here's something interesting of a note. It said that nailed the lows, but April saw the biggest increase in a while, but we are far from euphoria. So they wrote April increases move the sell-side indicator, sell-side index, closer to a contrarian sell signal than buy, but its level still indicates healthy price returns, 13% over the next 12 months. And when the indicator was here or lower, the S&P 500 was up 95% of the time, 94% of the time over the next 12 months, 81% overall. So overall, it's a rather neutral reading, but still indicating that there could be potentially further upside there. Let's take a look at the 10-year yield. The 10-year yield on the PMI data, this is what was more interesting, was the move in yields. Took a big hit to the downside, down 2.48%. After making a rather strong move, it completely got faded. And you could see the yield, the 10-year 2-year yield, the 10-year 3-month, they both came off quite a bit. And as I pointed out in prior episodes, it's actually pretty bullish for the markets. It's when it starts uninverting is when we've seen some issues, both in the near term and also in the long term looking back. The dollar came off too today. You can potentially call this a head and shoulders pattern. And if that's the case, it can break down to and around, probably around the 100 area in this range if you're just taking a measured move from the neckline. And that could be very bullish for things like gold. It could be bullish for the equity market. And it shouldn't, you'd think it would be bullish for stuff like oil. But a lot of things came off today. Now, if I just draw a line like this, you can see that it's also potentially not only breaking the neckline, but it's also breaking this trend. So we'll see here if the dollar actually gets continued downside propelling some markets up further. Gold was up on the day with that, and it is getting rather tight right here, along with some gold mining stocks. Silver as well, up slightly on the day, coming well off the lows. Now, oil made a big move to the downside based off of the oil OPEC plus news. If I remember correctly, it was something about the extended oil production cuts by like 3 months through the end of 2025, I believe it was. But there's some news there if you want to read it. But more importantly, the price action saw just a big range candle to the downside, following through on a lot of this move, down 3.6% on the trading session. Now, if we get continued downside, that would signal to me that inflation could be coming off, right? Oil is a huge piece of the CRB index, right, which is a good gauge to track inflation. So we'll continue to monitor this and see how that goes. Other than that, if you just draw the trend line out like this, perhaps, on a strong move down, we can see snapbacks. So to potentially still keep an eye on it for a move higher. This does track the 10-year yield pretty closely, and the 10-year yield was off as well, as we previously discussed. So let's look at the S&P 500 now, get a little bit more tactical on some opportunities. So far today, we had a large kind of candle, but it's all trading within the prior week, right? Today is the first day of the trading week. We're holding above the weekly 5 EMA, which is inclining. We made a big comeback on Friday. We were about to set to close, quite under it, creating an evening star pattern. And this could still be considered maybe an evening star pattern, right? Just the bullish move up, the indecision, the bearish close. I get that the last 30 minutes wiped most of that out, but it's still something to consider. But your clarification would be closing below 5,200, which was the level that we kind of had in sight. Let's take a look here at some gamma levels. You can see that we were below the flip line. The flip line was at 5,270. When we're below it, that's when selling but gets selling, buying but gets buying, and you get these massive swings. And another level of interest was 5,300. Today, we tagged into that right before the market opened, and we pushed down from that level into and around the 5,250. And there was also some interesting zero-date levels into this area. And we saw that move come back into positive territory more towards the end of the trading session. But if you take a line and you go through 5,300, this has been a level that's just been quite interesting. It's like price action keeps pulling back to these levels. Like we'll break from it, and we come right back, and we break from it, and we come back. We break from it, we come right back. We break from it, and then we come in right back over there to 5,300. So this to me is interesting. It's like open interest is building and building and building, and eventually we're just going to have an explosive move that holds to break from this level. Now, overall, what I've been saying was I'd be more bullish if we stay above 5,300 and not necessarily bearish below it, but I would say err on the side of caution. So if you go into the 15-minute time frame, you'll see that the 5-day moving average is trending lower. So on me personally, I was trading, and on today's open, I got rid of a lot of positions that I was in. Mainly the S&P 500. I had a decent sized position there in the Qs, and then also in Bitcoin, which I'll get more into. Even in XLI, I dumped that position into the open. Why? Because the market was moving higher, already off a strong move, and it was a declining 5-day moving average. So what does that mean? It means that it's bullish, but it's with caution, given the context of the shorter term trend. Well, we started to fade back into the swing high anchored volume weighted average price. And then we broke from those levels. People were flipping out. And if you were watching the live stream in and around this area, it actually seemed like the higher probability was to come back within the daily expected move. And that is what we did. So the weekly expected move is 533.63 to the upside, 521.11 to the downside. And, we're pretty much flat on the week, right? We moved a lot today from a gap up to an R move down and then a follow through up. Okay, so unchanged on the week, wide open range, and we have jobs report and other data coming out too as well. So we're probably going to tag one of these. That would be my assumption. If the 5-day moving average starts to flatten out to turn up, I would consider that more of a bullish sign. And you'd want to hold, obviously, the week-to-date anchored VWAP there too as well. So all this coming back up, right? Even if we gap down tomorrow, if it can break and hold these levels and then start to turn up, I'd be looking for, just like I did over here, for a sign to move higher, which we did trade if you managed to watch that stream. Zoom out a little bit further. You can take a look at the month to date, right? So it's a new month. It's June. I get to go on vacation this next week, so I might have a little bit less videos coming out. 542.65 to the upside, 512.09. And this is important because the upper monthly expected move was right around here last month for the month of May, and we got way above it. We were floating around. And this is when I started putting on a small hedge, telling people, like, there's a probability that we come back down to the monthly expected move. And I didn't know I honestly, it didn't seem likely that we were going to, but we ended up coming back and then bouncing from that level on the last trading session. So needless to say, I find these levels to be important just to give you an idea of what the risk looks like going into the month, what the options market priced in as far as that implied volatility goes. So if you are bullish, this 542 level is of interest to me because it doesn't show it on this chart, but that is the call wall. That is where traders are kind of, focused in on 5,400. And that would be, roughly, right around in this range near around the upper monthly expected move there. Now, another thing that I found interesting is price was moving down. For the last couple of days, the HYG smart money on the 60-minute time frame, looking at SPY, the dumb money, right? Smart money versus dumb money. I like to look for divergences. So when dumb money puts in a lower low, but smart money is putting in a higher low, right? It sometimes leads to price advances in the SPY. So for example, right here, boom, SPY moved higher. When the market was, coming down, we put in a higher low in smart money, the HYG, and then a lower low. And that right there, we call that and indicated a move higher. Then we started seeing a negative divergence where HYG was putting in actually a lower high while the SPY was making matching highs and the SPY came off. Well, guess what? In recent trade, HYG was putting in higher lows and SPY was putting in lower lows. And guess what? We followed through and we rallied to the upside. Now, HYG is pretty much matching highs to another high, which could indicate potentially that the SPY might go test that level too. Now, I don't have the daily chart in front of me, but just be aware that on the 15-minute time frame, this day right here, that was a bearish engulfing candle. So this has been confirmed to the downside. We're starting to see some move higher, but really to negate that bearish engulfing candle, you'd want to take out this high, which is roughly around the weekly expected move, to kind of ignore the potential of that bearish reversal. Not only that from a candle perspective, but you want the 5-day moving average to start to flatten out and turn back up too, while we hold into positive gamma territory where dealers look to buy the dip and sell the rip. So constructive stuff overall, but really we're pinned around 5,300. So you got to be obviously tactical. Let's look at the NASDAQ 100. This tells a little bit different story. So tech, right, it's been getting hit. We saw some big volatility on the trading session. It recouped it, right? But today we gapped up higher. Where? Into the 5-day moving average. It fell flat and then it came back to recover. But where are we? We're below the declining 5-day moving average. Okay, so even if we gap above it and it's still declining, it's bullish, but with caution because you can get above it. But remember, it's much better when the trend of it is starting to turn up. So it might take some time. Now, I can't say the same for the Russell 2000. The Russell 2000 could very well look constructive. I found it interesting that the 10-year yield was down pretty significantly on the day. And, well, IWM was, not doing too hot either. It actually faded the most from the highs down to the lows, a huge, huge reversal there. But if you look at the 5-day moving average, this is telling a different story. It's actually starting to flatten it out as we're starting to get this kind of widening volatility, right? And this kind of megaphone type of trade. It's holding above this 203, which is the lower daily expected move going into tomorrow. You can potentially look at this as like a little island reversal pattern. And as this is flattening out, this tells me, hey, let's look to see if it tags into the week to day anchored VWAP, tightens up and potentially breaks to go to 206.22. And maybe this starts the process of this turning around and starting to move back up. However, if it doesn't work out like that, well, if it starts breaking down, look for a gap fill and the lower weekly expected move there for IWM. So I like how it's volatile. It could be shaking things out, but it's still constructive. If you remove price action and you just look at the 5-day moving average, right, it's telling a story of price action starting to, or the trend is starting to neutralize, albeit in a lot of volatility. But it's giving the opportunity to potentially say, hey, hold this level. And if it starts turning up, it could be an opportunity. I'd really say watch the week to day anchored VWAP. That's declining, and you'd want to see that actually start to turn up there too as well. It'd be a little bit more beneficial. Let's take a look at Bitcoin now. The Sailor to Shift tool, it was on a buy signal the prior couple weeks ago or something like that, and we got the buy trigger too as well. I put a green line there, and you can see every time we had a green line, that was the signal and the trigger. Okay, so for example, right, one of the big ones was right here. Boom, it moved up. We had a whipsaw move back to a buy signal, buy trigger. Then we had a sell signal, sell trigger. Then we're on a buy signal, buy trigger right here. And overall, constructively looking at this, it does look pretty nice, right? So it looks like you can potentially call this a, inverse head and shoulders. I like inverse head and shoulders more towards, the bottom of a chart, but Needless to say, you can call it inverse head and shoulders. You can call it a base, whatever the case, okay? But it is starting to coil up here, right, on the daily time frame. And then we saw some price action today, breaking up through it. So I think this 72,000 to 74,000 is going to be obviously the area to watch for the break. But buy signal, buy trigger, price action is starting to try to break through this. It looks constructive. If it starts breaking down, obviously, then obviously watch out, okay, because we can get a move to the downside. So you just got to play it tactically and know that we are on that current buy signal, buy trigger. That's based off of the strategy that I put together. Other people obviously use it a little bit differently. If you look at crypto-related equities, right, they're not looking as good as Bitcoin. But if Bitcoin does really start to move, maybe these crypto equities, maybe there's a lag to them and they start moving up higher. So I just pulled up Mara, and Mara has been kind of coming off into this lower trend right here. It's still holding up above a flattening 50-day moving average, and the 20 days still inclining. So as it's kind of in this channel, right, after a nice kind of little break rate from here into the upper channel, it is consolidating, volumes kind of just stagnant. If we start breaking back up, maybe perhaps that opens the door to the upper part of the channel again, 24, 25, somewhere around there. It's just showing, yeah, you just got to be mindful of the risk, because if this thing breaks down, be mindful of that, because it could be a fast mover. It's a high beta name. If it breaks down, you can always look to re-enter if it comes back in, shake some people out and comes back in for a rip. That's always a possibility there too. That's all I really got on today's episode. Now, if you are in the Discord, I'm going to go ahead and post this section into the trade ideas tab. I have 5 stocks that are on the radar. Some I think are from the tight list, some are not, and I wanted to go through those now. So if you want to see that video, I'm going to post it into the swing trading community. So that's all I got for you. I hope you guys enjoyed, and hope it lets you see some insights into the market that I'm seeing as well.